Good day, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Tuesday, and we're now at the 13th of July, 2021, just about 5:15 in the afternoon. All right, let's talk about what we've got going here. We had a set of hot CPI numbers. The market came out with a number that was the highest reading in 13 years. It was almost double what the trade thought it was going to be. And at first, the market just hung in there. You didn't have much reaction, any feel to it. As the day wore on, the market eventually gave ground. Now you have tomorrow a key day. Chair Powell goes to Capitol Hill, and he's going to speak for 2 days. Tomorrow, I think it's in front of the Senate the Senate Finance Committee. Then I think the House Finance Committee after that, the day after. But tomorrow's the key day. It's generally the second day. There's not that many unique questions. He should be asked about how hot this number is, what the Fed's going to do about it, what do they think they're at right now, and the market's going to be geared on that. If I'm the Chair Powell, it's transitory. Use lumber as an example. You do realize lumber is lower than it was at the beginning of the year. It was, I did a report on it today, it was about $645 a board foot. It shot up in that March through April time frame, $1,700 a foot. Started off the year, though, $800 and some odd dollars, so it's lower than it was. What do you think's causing a lot of this? Used car prices. I know you're going to wrap me on that, but it's true. They're counted in this, and they are one of the elements. There's plenty of other elements. I go to the store just like you. Prices are up. Some of the beef that I'm buying, it's over $2 a pound more than it was just 2 months ago, 3 months ago. I go to get gas. You know, in Chicago, it's almost $5 for a gallon of premium. $4 and something for regular. So yes, we're getting that. Do I think that's transitory? I do. And we'll see what the market thinks of it. So let's go and see what we've got here. The first thing in looking at ARK, you can see that I pointed out before it had filled some gaps. When the market got up here, you know we were talking that I thought that might have been the peak of the market for the time being. You've got a pattern of lower highs and lower lows. That is bearish. You negate this bearishness by getting back over 127.40, which it hasn't done. Where's the market losing its momentum? Against the 18-day average. Now, on the recent break, it fell back, went down to the 100-day, got back over the 18, fell back, and now it's back under it. If it wants to make another test, the likely first zones of support in moving average zone is going to be 119.81 to 119.53, the 100-day average, along with the 200-day. The resistance should be the 18-day average of closes. Where's my friend the Bollinger Bands? They're further away. So I don't think the bands are in play unless you come crashing down here. Barring that, that should respect that price is what I'd be thinking. I have bias down, trend down, momentum down. This market looks bearish. I think the bears would be hitting the market there with stops over that 127.40 area. BBEU. My eye goes to an overbought condition without a trend. Lower low, higher high, sort of had a rally back to the 18-day average and couldn't do anything with it. I don't see a setup there. In PAVE, I've been looking at the 100-day average, offering a lot of support, but it's not a buy mode. You have a lower low, a higher high. The Democrats are very much in trouble in getting anything passed until the fall. So if you're thinking you're going to quickly get an infrastructure bill done, passed, done, all that, oh no, I don't think it's anything like that. And even the reconciliation to get that next phase built, they've got a lot of problems there. Today is the second day of meetings with Chuck Schumer and a group. They're trying to find a way out of this, but they have their hands full. It's so funny. You do recall, and funny being what went on with politics, this used to be Trump's dilemma. Now it's Biden's dilemma. All that happened is the left shoe became the right shoe. It's all presidential orders. It's not things passed in Congress. You went from the Republicans having to do that, now the Democrats have to do that. AMC, there's an interesting statistic, read up on it. This week we saw Black Widow, and it did well. It did, I think they said 70 or $80 million in ticket sales in North America, if I'm correct. I'll give you the surprise. I think it was North America. It could be worldwide. I'm not sure. I think it's North America. What do you think they did in sales online? 60 million. So if I'm a theater owner and I'm thinking, oh, they're going to let me have those sales early on, I think that just dashed all that. I even saw that the FX movie, the XXX movies, they had strong online. So people are staying home paying $30 and they'll bring in their kids, whatever. They're not committed then to $100 at the candy counter, parking expenses, you know the game. That's what's wrong. And you can see the market's working its way down. When it was here, I was saying to you, I don't understand. And the only reason I have this up here, I used to own a movie theater. It's one of the other crazy investments I did. And I know the dilemma that they're facing. Something I actually know about. Momentum down, all this down, trend down. You'd have to get over 48.92 as a chartist for the trend to be negated. You are under the Bollinger Band, so you don't stay under that more than 5% of the time. I'm looking for it down. Could we be headed back to those numbers? It's a possibility. In the semiconductor, the market's now what? Lower highs, lower lows. Prices today closed over the 18-day average. It will take very little to tip this market down. At the same time, I want to be both sides because I'm fair. If you were to take out 189, you could end up with higher lows, higher highs, bullish, possible target 195. But I think the bears are trying to hold it right here, not letting it get over 189. If that happens, could you be headed back to 181.08, the 100-day average, and that other number? Yes, because if you close under that 18-day average, then your bias is down, your trend is down, and I'm assuming you don't take out 189.00. I'd flip the other way if you took that 189.01 hit. I was looking for some support down here, but as I said, when you have an embedded reading, folks, if you're embedded, you're looking down. And it means the market is being sold on the rallies until the red line's back over 20. So before we get too far, I want to remind everybody, I want you to look up here, right up there at that icon before I go to the next chart. Tomorrow at 12:15, I am opening up the webinar. That'll be at 12:15. In order to come into the webinar, you got to click on this icon and register yourself. It is free. I will not be doing another webinar next week. So if you're going to do one, you got to do it this week. You see it there. I'll talk about this right at the end in an ad for it. Nothing that you buy, but just talking about that. But at any point, that's how you can register. ESGU. Higher lows, higher highs, bullish embedded. So I have bearish embedded in PODX. I have bullish embedded here. If you haven't taken that embedded course, you want to, because this sets up the possibility on pullbacks of the trade buying this market again until that embedded reading is lost. In the energy sector, this keeps falling as real energy prices keep going higher. You were up another $1 today in the crude. The EIA came out with their projections today, and all those projections show what a tight market we have, barring a price war breaking out in OPEC. And I think on Thursday we get OPEC's projections as to where oil prices are and possibly heading. There is still nothing new been done between the UAE and Saudi Arabia. They have not agreed to anything yet that I'm aware of. Lower highs, lower lows, momentum flat, not oversold. So I think the trade is still bearish, looking for this 51.57 to 51.45. If the market were to take out the highs of not today, but yesterday, and that number would be 53.09, would be a sign that the market's not going to reach there, and probably going back to the 18-day average of closes. To get bullish, you'd have to close over 53.59. When we step over to the emerging markets, I think you reached an important low back here, and I know I said it to you in these. Why? That 100-day average lower Bollinger Band, that setup is often the sign of where a market ends a decline. And you have been coming down all this way. And now you're out of a trend. You have a lower low, higher high. You're overbought. There's nothing to do, but the downside ended. In the gold market, if you're one of my subscribers to my morning SPDR ETFs, I warned traders. I said, don't get excited here. This is where the trade is going to be taking money off the table in gold. And I think they did against that 169.86 level. First off, let me just see. The market closed 169.22. So the high today, 169.90. I think you're right in that zone, as I said. That's where I think they came out the upper Bollinger Band. In the gold miners, it's the same thing. You hit those bands, you got to learn how to work with them. There's a way when they start running, and you can pick that up. My course talks about this. In any case, higher lows, higher high, all of a sudden in the middle of no man's land here. I don't see a setup. And by the way, look at how the arms have wrapped around in the Bollinger Band right in there. The volatility's coming out of that market is what it says, unless we get another set of events to set something up. TLT, when we got up here, what was I saying? It had been climbing the upper Bollinger Band. You had 3 days up. You had finally hit the 200-day average in the upper band. And the hardest thing is this. I know this is where most of you get super bullish. It's running, it's going to keep running, and I'm the opposite. I'm telling you, I think this market has a problem now. It's extended. That first challenge of this number hasn't been hit, and I feel pretty darn good about what I said. FXE, you went down to the lower Bollinger Band and under it in the euro. What am I going to tell you today? You know it's going to fall out of my mouth. If one were short, they should have covered all shorts today on the first challenge of a lower Bollinger Band. Doesn't mean you have to follow me. That's what I teach in my charting course. And as I said, what we try to do to get you going with all this is give you an idea. So in my What's Up Live webinar, here's what we do. You write me questions. When you sign up for the course, you're going to get your user ID and password. Read what you get. It's got my email address in there. Send me the questions. I'll prepare the charts, and we move through like that. These webinars do not last longer than 15 to 20 minutes, and if I don't get enough questions, I frankly don't keep the course going. Now you'll think, well, I can ask me the questions during the course. I'd rather have the charts brought up so I've got everything for you. I'll bring them up, but I can't set window envelopes and all the other parts. That's going to take time, and that's time we don't have. So how do you do this? You bring your questions. It could be on SPDRs, ETFs, the stocks individually, the futures markets. I will do my very best. We keep it fast-paced and a lot of fun. I do not record it, so if you don't see it, no way to get in. How do you get there? Just follow this link up here. If you can't see that, call my staff well before we start at 12:15 p.m. if you want in. I'll see you tomorrow.